For those mortgages, your rates are in the low 4% range. So we're seeing 4.04, 4.09, somewhere around there. That's a good rate for a fixed rate.
What is your analysis as to why we have not seen a rate cut yet? And do you anticipate that there will be a rate cut by the end of the year? Interest rates, inflation, and so much more pertaining to the mortgage industry is one of the hottest topics that people usually talk about. And we at GTA Muslims take pride in bringing you the real data so then you can make an informed decision for your journey going forward. For GTA Muslims, I am Moiz Rahman. Let's go see how the interview was, our exclusive chat with Omer Amir, our mortgage specialist from Six Mortgage Group. Omer, thank you so much for having us here today.
Thank you so much for having me, Moiz. It's my pleasure to be here.
Honestly, it's our pleasure. You have such a beautiful office here. You have an amazing backdrop here as well. But instead of complimenting your office, we have so much to talk about with the mortgage industry and what's going on. Tons of questions. We did a little toll with our audience to see whatever questions they have that we can ask you, and we got a flood of them. So we're gonna have to do We're gonna have to do multiple series. Today we'll just do a handful. But before we dive into that, tell us what is going on right now in the mortgage world. Are people hesitant? Are they buying? Are they scared? Are refinances happening? What is going on?
There's a lot to unpack here, right? So we've noticed, obviously, you've probably read the news as well. There's a ton of renewals happening in 2024 and 2025, right? And actually, it'll continue going into next year as well. So there are a lot of renewals happening. People are looking for better rates, especially people that got mortgages over the last 3 to 4 years where they're used to super low rates and then rates started going up. So everyone is really worried about interest rates and especially what kind of renewal rate they'll be offered. So we're seeing a lot of clients shopping around, making sure that they're getting, something that's still reasonable compared to what they had 3 to 4 years ago. But we're also starting to notice that the purchase market is starting to pick up significantly, right? I know you've talked about there's being a lot of listings and a lot of inventory being on the market. And I think part of it has to do with the fact that, sellers were just not ready to part with their homes at the prices that are reasonable for today's market. But now those sellers are understanding that if they want to, sell in this economy, they have to embrace what the prices are today, right? So they're willing to let those properties go, and buyers are getting amazing deals out there. So we're starting to see a lot of transactions from the buyers as well.
That's actually very cool. We read a fact this morning that roughly only 34% of the sellers on the market right now are actually getting the dollar figure that they want, right? Most sellers that are coming on the market are unable to locate the price that they want, and buyers obviously want a deal, right? So how do the rates look right now? What do the fixed rates look like? What do the variable rates look like? And if you can unpack a little bit further, what controls these two rates?
Yeah, that's a very good question. So currently, rates are actually quite good, right? So for people that are putting 20% down or more, which are called conventional mortgages, right? So if you put 20% down or more, for those mortgages, your rates are in the low 4% range. So we're seeing 4.04, 4.09, somewhere around there. That's a good rate for a fixed rate. For variable, same thing. If you're putting 20% down or more, you're seeing about 4.3, 4.2. That's the range. But for high ratio, people that are putting less than 20% down, these are generally first-time home buyers. And if they're putting less than 20% down, they can get better rates. We're seeing somewhere like 3.89, 3.74. So rates are generally very favorable. And that's also, telling a lot of people to jump into the market because they can get some really good deals with the real estate prices combined with the great rates. It's a win-win situation.
We're coming down to variable rates and fixed rates, right? There's different metrics that control it. It seems like variable rates controlled by Bank of Canada meetings. Everyone's always excited for it. Obviously, everyone wants rate cuts. And then fixed rate seems to be controlled behind the scenes. What metrics control these two components of the mortgage industry?
It's a great question. So with variable rate, you're absolutely right. It's all based on Bank of Canada's overnight rate. So if Bank of Canada increases the rates, your variable rate goes up. Bank of Canada decreases the rate, your rate goes down on the variable rate mortgage. Now, on the other hand, fixed rate mortgages are based on the bond market. And the Canadian bond market, if the bond yields go up, rates go up. If bond yields go down, rates go down. What a lot of people don't realize is that the bond market fluctuates daily. And bond market fluctuates based on any kind of news, geopolitical news. So for example, the war broke out, right? That would impact bond yields, right? Trade deal. If Donald Trump goes on Twitter and he says, I'm backing out of the trade deal with Canada, bond yields right away will spike. Interest rates could go up, right? So any kind of news, geopolitical, can impact can impact the bond market right away. Same thing with GDP news or job news. So when the job data comes out, if unemployment goes up, that could impact the bond market. Bond market, instant. Variable rates though, exactly when Bank of Canada sits down and meets. And this is something very interesting, right? Every time Bank of Canada decreases the rate, variable rate goes down, and clients automatically assume that fixed rate's also going to go down. So they call us and they say, hey, Amir, our variable rate just went down. Bank of Canada just lowered its rate. So is our fixed rate going down as well? Well, no, not really. Because fixed rate, the pricing has already been determined probably weeks ago, right? Because it's instant. Any change that happens in the bond market, you'll see the effect in the fixed rates instantly.
So fixed rate seems to be a common choice and method that people prefer for their mortgages, right? But you're saying it fluctuates quite a bit and quite rapidly. Is there something a buyer can do when they obtain a pre-approval for their fixed rate to protect them with the rate offer that day? Or do they just have to go with the motions and take whatever rate is happening that day of?
That's also a very good question. So primarily, 5-year fixed mortgages are the most popular type of mortgage, especially for first-time home buyers in Canada, right? Now, when you apply for a mortgage today and a bank gives you a fixed rate, it's held for you. It's held for you for, at least 90 days, all the way up to 150 days, depending on what bank you're going with. For example, if you go with CIBC, your rate is held for 120 days. You go with BMO, it's held for up to 150 days for you. Now, if the rates fluctuate in the market, you can always ask for a better rate. But if the rates go up, you're protected. So that's the message for buyers. If you've signed a purchase and sale agreement, get your rate held right away. Don't wait on it. Go get a rate hold at your bank or contact your broker, or go to your credit union, wherever you prefer getting your mortgage, get your rate secured right away.
Interesting. I didn't know that. So if someone does get a rate approval, and let's say that it's held for 120 days, if the rates go lower, they can ask for a new rate, but in the event the rates go higher, they're still protected because they got a rate hold, let's say, on the original rate, right?
Now you're getting it.
Okay. I'm going to be an expert by the end of this, right? Now you said the 5-year term is the most common term for first-time home buyers. Why do people usually choose variable rate?
Over the last, I would say, 10 to 15 years, variable rate has generally outperformed fixed rates, right? Now, obviously, the last couple of years, that wasn't true. Variable rate, we had 10 Bank of Canada rate hikes, and people that took variable rate weren't really happy with it. But overall, variable rates have been a winning bet for most buyers. But generally, why people take variable rate is the flexibility the variable rates offer. When you take a fixed rate mortgage, and if you need to break that mortgage, within that term. So for example, you took a 5-year fixed mortgage and you need to break that term in 2 years or 3 years because you're moving or you're selling your house or some life event has happened. You could be looking at a massive penalty, right? And that penalty generally is about 3 to 4% of your mortgage amount. So it's significant. On the other hand, with variable rate mortgages, you only pay a 3-month interest penalty. So your cost to break the term is a lot less, and that's the flexibility that appeals to a lot of people. Now, the other thing is, like I said, over the last 10 years, variable rates have generally outperformed fixed rates. So people on variable rates have had a lower interest rate, and that's always more attractive to people. A lower interest rate. Let's sign up for it, right?
So let's say someone goes a variable rate.
Yeah.
And Bank of Canada decides to reduce the rate. Okay. Does the payment change? How does it change? Or does the interest portion change? How does that go?
Yeah. So with most banks, your payment remains the same, but more of your payment goes towards principal as opposed to interest. So what happens then is, instead of you paying your mortgage off in 25 years, you would then pay off your mortgage in, let's say, 20 years, right? Now, having said that, with most banks, you can actually contact the lender and you could tell them to decrease your mortgage payment based on the new interest rate, and they'll do it for you, right? With some banks, it's instant. So for example, if you're with like a lender like Scotiabank, right? If the interest rate goes down, your payment will go down right away.
Interesting. Okay.
You can handle that yourself.
Sure, gotcha. And talking about interest rates, which I think in itself is such a huge topic, there was a lot of chatter that this year there will be rate cuts. And a lot of people that I spoke to, maybe yourself as well, they thought that in the earlier half of the year, rate cuts should have been seen. What is your analysis as to why we have not seen a rate cut yet? And do you anticipate that there will be a rate cut by the end of the year?